Good afternoon and welcome to HYCM's FX Week Ahead live market analysis with myself, Giles Cochran. I hope you're all well. And just as folks are coming in to the webinar, I was going to say hello to some folks that are coming in. Hi, Ali. Hi, Yasser. Good to have you. Sharjil, good to have you on board. Just as other folks are signing in now, I'm just going to look at the disclaimer for the week ahead. Please be aware that any trade setups, recommendations aren't trade setups or recommendations as a signal service. The whole idea of this FX Week Ahead seminar and the workshop tomorrow is to show how I'm thinking about the markets, how I go about making my own trading decisions, so then you can develop your own trading conviction and decisions over time. So any entries and
exits. Some comments come through about UK PM Johnson spokesman. There's no thing.
My apologies for the squawk. Just making it clear that any different trading parameters that we discuss is not as a signal service. It's about education and seeing that market context. Because market situations or dynamics change so readily, you need to be able to recognize those changes yourself rather than getting signals from another person. So that's the whole philosophy behind my webinars, which I run on Monday, and the workshop on Tuesday. It's about trading and giving you guys education to make your own trading decisions. So when the time comes, you know why you're trading, what you're trading, and where you're exiting, etc., etc. So just want to make that clear as I do each time. And we're going to get on to the FX week ahead. And we have got an unusual week. The current market mood at the moment is been quite flat. The European indices are relatively flat. We've got some positive, some negative. This has been after a very large negative open. And the negative open has been, you can see here, the Shanghai Composite, looks, that's down minus 7.72%. So that is a very large fall. And the reason for that large fall has been that the Shanghai Composite and the CSI 300, both China indexes, have been closed over the last 10 rough days. And that has been for the Lunar New Year. And so this large fall has been the aggregate or the build-up of that negative sentiment surrounding what we've all heard about, the coronavirus. So that's why we've got this large fall. And also the Nikkei is down minus 1%. And for those of you who follow my webinars, if you're looking at equity moves, when there's an equity move of like minus 1% or more, you want to take notice. So the market's in an unusual frame of mind now because we've got this huge fall in the Chinese stock market, but it's really playing catch up. You know, the equity markets have been falling steadily over the last, 10, 11 days. And that's because of the coronavirus. Shanghai Composite all of a sudden is playing catch up. So you can understand when the market's trying to find its feet. How bad is the coronavirus? Is it going to be worse? That's what the market's trying to understand. So at the moment, as I'm coming to, I came to my desk this morning, we're in an uncertain time, essentially. The market is trying to work out whether it wants to go back to that risk-off mood. You can see, look how the S&P 500 closed down last Friday. The NASDAQ, the Dow, look, down minus 2%. These are huge falls. Okay, NASDAQ down minus 1.59%. So the market's going to decide, is it going to go back into this risk-off mood? And the Shanghai Composite is just making the market think twice because, okay, that's a huge drop. Which way does it want to go? Now, the S&P 500 future market is up 0.5%. So, in other words, the market is just saying there's a little bit of optimism here. Okay, not a lot, but it's not carrying off in that strong risk-off mood. So, at the moment, that's exactly where we are. We're at that situation of tentatively seeing. Now, we obviously the CSI opening down more than 9%, so some large drops. Now, we've also got further geopolitical concerns, and this is the situation we're in at the moment. There's a lot of geopolitical issues. We've got the pound pressured this morning, and the pressure on the pound this morning has been on those EU-UK negotiations are really starting to begin in earnest. We've heard from Boris Johnson, we've also heard from Michel Barnier this morning, and the market is really trying to get its head around these trade negotiations. Now, very briefly, the British pound has a lot of difficulties coming up. There is a lot of political uncertainty for the pound. So if you're trading the pound, you must be aware of these political uncertainties. I'm just going to get that. I'm just going to get a different. So I'm just going to pull up a different chart for us that's easier to see. Here we go. Right. Now, I'll show you what's been happening with the pound. We've had some bids into pound at the end of last week. The pound was being bought at the end of last week on the slightly more optimistic Bank of England meeting. Then the pound's been sold off since the open last night because Boris Johnson was essentially saying, you know, if we don't get a deal with the EU, that's okay. So in other words, he's negotiating fiercely. We then had Michel Barnier come out, and some of the comments that Michel Barnier have made have been more conciliatory. We need to, there's going to be a lot of unpacking, and because that meeting has just occurred, there's going to be a lot of unpacking what that actually means. Okay, so the pound has to negotiate two trade deals at the moment, one with the EU and one with the US. And then Boris Johnson wants to have 80% of all free trade agreements arranged within 3 years. So Britain is now trying to deal with the world. And these deals take time, they're difficult, many are complex. The two big ones, the international ones that are of note, EU, which is over half the export market of the UK, comes from the EU, and the US with about 13–14% of UK's export market going to the US. So two big markets, EU the largest. Boris Johnson wants to get it done within a year. Can it be done in a year? Tricky. That's the issue. That's why the pound's being sold off. It's going to be so expecting pound sellers at the moment, but there's nothing tradable. But if you put a gun to my head, which way is the pound going to go? So the pound's going to fall because concerns over the EU-UK trade deal. If Michel Barnier suddenly says we've got a deal, something's great, we're going to see the pound rally and retest these 1.3500 highs. That will be the first test that I would expect. You can see, look at this trend line here. You can see this triangle. We can see if you just look at price, you can just see price starting to consolidate into this kind of triangular pattern. So, when you get this kind of moves, you're just heading now for an explosive move. Okay, you see price condensing, lower lows, lower highs. It's just condensing in. You could argue that was a false break of this level technically, and then we're closing back into this area, so we didn't take more like false break down to the downside. That's just technically. Now, fundamentally, I haven't got anything to go long or short on this. If someone put a gun to my head, I'd expect sellers on retracements back up to this level. But this is the issue with the pound, the two trade deals. So what's moving the pound? Look at the trade deals, EU, UK, US. So that's the key movements of the pound. And the way to trade them is to trade the latest news at releases. If it's positive, it's pound bullish. If it's negative, it's pound bearish. Now, oil's also been bid this morning. We saw some strong bids coming into oil, and I'll explain why those bids have come in. Now, there's a mixed picture for oil, and it's being aware of it because when this gets clearer, there'll be an opportunity here in oil. So just get horizontal line. We can see here that 52, 51 region is daily support. Now, oil was bid today because there's been some reports out from OPEC, and the reports from OPEC have been that there are going to be a production cuts of 500,000 barrels per day. So that was the bids. You can see that retracements have been bid up. There's also reports that possibly Saudi Arabia might have an emergency 1 million barrel per day emergency cut. So reducing the supply of oil in the market, which pushes up prices. That's why we've seen the bids. But oil is tricky because there's also conflicting reports that China is going to be using 20% less oil, and there's also problems with Libya. There is some ports in Libya which have restricted oil supply. There's also concerns around the coronavirus that less oil is going to be in demand. That's why oil prices have been falling. That's why these oil prices here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, these last, this leg down has been on the coronavirus supply fears. So the oil market is well supplied. The oil market might have less demand in the future, but then Saudi Arabia said, well, and OPEC, we might cut production. So that's why we've seen this uptick here. Now, there's not enough clarity for me which side is going to win. Is it going to be the supply side? Or is it going to be the lack of demand? Or is it going to be OPEC's cuts? They're due to meet 14th, 15th of February now. Which one? Now, this is going to be moved around on the coronavirus fears. If the coronavirus fears recedes, there's a vaccine, there's a cure, it's not as bad as we feared, then I would be expecting oil to be bid. But look out for Libya. There's about 1 million barrels that are impacted by Libya's ports being closed. So, you know, a reopening of Libya's ports is going to bring supply back into the market. So I hope you can see now the difficulty with oil. Now, if that picture, but say one of those factors disappears, then oil may be more simpler to trade. So just to be aware of that, in this daily support level, if this daily support level holds, that's obviously a great place for buyers, have stops underneath. If this support level breaks and sellers are in control, then obviously it's a great place to sell with stops above from a purely technical perspective. But of course, I'm not, you know, I don't trade just the technicals, it's the fundamentals and the technicals. But it's worth pointing out, and I hope you guys can see why I pointed it out, but the mixed picture that is happening in oil, which is what, or else, if it was just the OPEC production cuts and that was the, you know, the only factor driving the market, that would be a great place to buy with a stop underneath. Okay, but however, that's not the case. But one situation to be aware of. So we've covered some of those issues there. The coronavirus update. Now, this is the issue. How far is it spreading? And how many people are dying? That is what the market's trying to ascertain. How serious is this? Now we can see, look, so we've got 17.3 thousand confirmed cases of the coronavirus. We've got around 362 deaths. This is not 100% up to date, but it's a good infograph of the different coronavirus. And we can see we've got 20 cases in Japan, 19 in Thailand, 18 in Singapore, 15 in Hong Kong, and we've got a number of 12 cases in Australia. There's a lot of tourism between China and Australia, so it's not surprised to see Australia right up there. And we're in this situation now of cases. There seems to be that seems to be this data here, 17.3 thousand by 17.2 thousand, seems to be a beginning of a flattening, plateauing. You can see at first, particular, the jumps were nearly, it's nearly doubling each day. Not quite, but nearly, okay, in some cases. And this is the first time we're seeing a bit of tailing off. So the market's trying to work out, is the coronavirus getting worse? If it's getting worse, is it getting more serious? Are more people dying? Then that's when we're going to see more risk off. So just to be aware of what's going on with coronavirus, we're at that stage. The market is trying to understand that. It's trying to ascertain which way it's going. So that's why at the moment, in terms of market sentiment, I'm neutral. I'm really waiting to see a new driver. If we see a new driver, if we see the coronavirus situation getting worse, this is what we're going to see. I'm expecting to see gold buyers. That seasonal demand has now gone. That was just on January. But I still expect to see gold buyers. I expect to see yen and Swiss franc buyers, oil sellers, and then I'm expecting to see Australian dollar, New Zealand dollar, and Canadian dollar sellers. Okay, and equities, I expect to see them being sold. So S&P 500 falling, FTSE, and the Nikkei. That is what will happen if we get a return to a risk-off market. Okay, so just to be aware of that, just keep that in your mind. As I said, I'm neutral. I can't see a clear direction on any currency at this moment. So I'm waiting on the market moving. Look at the US futures market to keep an indication, and at 2:30 we'll have the US cash open. So that's where we are on Monday morning. And a little tip is each beginning of the week you kind of get a reset in price. So when the new week comes, it's like a reset and start again. So just to be aware of that kind of scenario, okay? That's what's happening. The Chinese indexes have caught up with all the coronavirus fears. Now the market's just pausing for breath, saying, well, which way do we want to go? Is that going to be a bottom? Are we going to recover from here, or are we going to carry on another leg lower? No one knows the outcome for that answer, but what we do know is if the coronavirus outbreak gets worse, we're going to see the extension to last week's moves. So that's what to be aware of in terms of risk. Now, going to the week ahead, let's look at some key events that we have. We got a quiet day today, apart from the US manufacturing PMI. Now, this is going to be important, okay? At 3 o'clock, we want to see how US data is doing. This will be important for the dollar. And in particular, I think we want to look at like US dollar Japanese yen currency pair today, particularly with risk tone. So look at the PMI data, and then if we get a really dovish result, if we get manufacturing down sort of 47, then look for US dollar Japanese yen pair sellers if we get a risk off tone, because then we could have a weak US dollar, strong Japanese yen. So that's one to look out for. If the US dollar holds up and it holds high, then that would be positive for the US dollar. And manufacturing, of course, is in focus at the moment because of global growth. So that's an important data out for the US. We also have another important data point for the Reserve Bank of Australia on Tuesday. This has the potential to move the market. Now, the rates are expected to be the same, 0.75% versus 0.75%. And the data for Australia, as of late, had been a little bit better. So the RBA had been talking about reaching a turning point. However, the outlook for the RBA is expected to be bearish. Now, just cast your mind back. You have the Australian bushfires, which sadly are still going on. We also have the coronavirus fears, which hits Australia because Australia has around 33% of Australia's entire GDP comes from its trade with China, and about 33% of Australia's export go directly to China. Okay, and China bought 82% of Australians' iron ore shipments last year in 2019. Okay, so the connection between the Australian economy and the Chinese economy is huge. So what that means as currency traders, what's good for China is good for the Australian dollar. What's bad for China is bad for the Australian dollar. So you can see now the Australian economy has two negatives that the RBA has to try to manage. One, the fallout from the Australian bushfires. It's going to affect Australian growth. It's going to affect jobs. It's particularly going to affect wages. Two, the increase in the coronavirus. Tourists from China are now about 15% of total arrivals into Australia. And they account for more than a quarter of total visitor spending. So, quite simply, the tourism is going to be hit very hard when there's a lockdown on the border between Australia and China. Obviously, you can see that there's quite a few cases in China, in Australia from China already. So that's the risk that the RBA has to manage. So they're going to have to think, yes, our economy, we think, reached a turning point, but what impact is the bushfires going to have? What impact is the coronavirus going to have? So I'm expecting a dovish leaning statement. So that potential for Australian dollar weakness out of this rate meeting. Now, if you can stay up, obviously stay up. You can look to see if there's a rate cut. If there's a surprise rate cut, which I wouldn't rule out, it's not impossible. I wouldn't be massively surprised if that happened. Then a sell on stop is the best way to manage that, about 20 to 30 points away, okay, away from open when you enter a sell on stops a few minutes before. That's a simple way to do it. Now, the other important data out is the New Zealand dollar. Now, the New Zealand dollar, again, has been a little bit more positive recently, because the New Zealand dollar has been more positive because there's been some GDP surprise. The Q3 GDP came in at 0.7% versus 0.6%. The annual average GDP came in at 2.7% versus 2.5%. And the inflation and the employment data are going to be important for the New Zealand dollar. Now, again, New Zealand is impacted by coronavirus fears. It's one of the commodity currencies, and increase in fear equals New Zealand dollar selling. So just to be aware of that. So you've got to factor that into the risk tone. So if risk is off, and we're seeing Australian dollar, New Zealand dollar weakness, and then we get some weak data out of employment and or inflation on Friday, then that would be a good potential currency to sell, because it would be weak. So in that instance, say there's a risk-off environment, we've got weak employment and weak inflation, then a New Zealand dollar Japanese yen pair would make sense to sell. Now, say risk turn back to on, say the coronavirus fears are improving and New Zealand dollar has some good employment and some good inflation data, then in that case, we expect New Zealand dollar strength. And for example, we might look to trade that against the Australian dollar. So you might see Australian dollar, New Zealand dollar weakness if the RBA are bearish on Tuesday. So just keep that in mind. You might even potentially trade against New Zealand dollar, Japanese yen, New Zealand dollar, Swiss franc longs. So how we respond to the New Zealand dollar is going to depend on risk tone and the outlook on the coronavirus. Okay, so that's why at the moment we're in this, it's like a seesaw. Which way is the market going to go? The market's still trying to work out. On Wednesday, we have Governor Lowe speaking, risk for the Australian dollar. Little tip, remember, whenever you have a rate statement, and then the next day or in the next hour, you have a governor speaking, that's very significant, because sometimes the market can respond one way and the governor can say, oh, the market took this the wrong way, or, the Australian dollar sold off more than should be warranted, or when we said this, we didn't really mean this. That's the kind of situation that happens. So make sure you're aware of this meeting. President Lagarde speaking on Wednesday. Still haven't got a sense of what President Lagarde is doing. Still very slow. There's doves and there's hawks, and President Lagarde has called herself an owl. And she has been responding in an owl-like way, patient, reserved. She's not rushing ahead with any policies. So I'm not expecting anything from Lagarde as well, but you just have to acknowledge that she's speaking. So Euro traders, be aware of that on the Wednesday. Non-farm employment, another US dollar data point, strong beat there. I was obviously positive for the US dollar. Again, services PMI is important for the US dollar as well. Retail sales and trade balance coming out. Remember, that's in line with what happens with cash rate, RBA rate statement. So you have to interpret that in light of risk tone, in light of what the RBA say on Tuesday. So just to be aware of that. And finally, Friday, we close off the week with the inflation expectations, important for the New Zealand dollar. We've already covered that. And Canadian dollar data, we had a sort of more dovish twist from the Bank of Canada at their last rate meeting. So that's something to be aware of, as well as the US dollar. Labor data has been strong for the US, remains being strong. So the only thing that's going to really drag down the US dollar is if you get a weak reading. But even one off week reading is often seen as a weak reading. So I'm not expecting much change from the non-farm payrolls on Friday at all. That is the main issues for the week. If I had to say with this week, the thing to be aware of is what's happening with risk tone. It's all about the risk tone with this week. Is the coronavirus fears going to accelerate or are they going to decelerate? So that's the key aspect to be aware of, and the key kind of message to have in your mind is this. You know, if we get a risk-off environment, we're looking at gold buyers, yen and Swiss franc buyers, oil sellers, Australian dollar, New Zealand dollar CAD sellers, equities being sold. That, for me, if we go into risk-off, that is my playbook. Okay, they're the kind of main currencies I'm looking at. Aside from that, I'm looking at the data points we really mentioned. The New Zealand data is the most important one for me out of the rest of those, bar a surprise rate cut for the RBA. So Australian dollar and New Zealand dollar in focus for the scheduled data, but don't forget they are moved around on risk. So you have to hold these two stories together. Guys, I hope that's helpful. Tomorrow we should hopefully have some more information, and tomorrow we should have had the rate statement. So we'll look at that in some detail tomorrow for the workshop. So if you're around, come and get the recording. We'll look at the RBA rate statement, see what's happened, and see if there's any opportunities for trading the Australian dollar tomorrow. Okay, guys, good to have you on board. Trib, good to have you. Yasser, Salvatore, Lolu, good to have the regulars here. Ali, Hashik, Sharjil, thanks for coming, and look forward to seeing you tomorrow. Take care now, guys. Goodbye. Thanks, Trib. See you, Sharjil.